Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Happy Monday.
Yes, sir. Yes, sir. It is Monday.
It is Monday. Well, I want to talk about a few pretty substantial different things that are really happening in the market right now. I don't know about you, but I have seen about a 40 or 50% increase in new clientele just coming in the first of the year. I don't know if it just people are feeling better. I don't know if maybe they're feeling more confident in the economy. I'm not quite sure what it was, but it has increased. Then Friday, guess what happens on Friday?
Well, we have a big announcement.
We did have a big announcement. So on Friday, Trump announces that he's going to have the feds purchase $200 billion in mortgage-backed securities. Now, as you can remember, now, first of all, that's not a lot of money. It sounds like a lot, but it's not.
Sounds like a lot. I was going to say, isn't the whole market like $13 trillion or something?
It's an insane amount. However, it's the right move and it's going to help, because if he can't get the feds to move the Fed rate, he's going to find other ways to stimulate our market. And that's a positive thing. Now, as you know, the reason that we had low interest rates during COVID and leading up into COVID is that the government was purchasing mortgage-backed securities. It was falsely deflating mortgage rates because the government was buying them. The government shouldn't be buying mortgage-backed securities unless they're trying to stimulate the economy. And that's what they did during COVID. Now, that got us into a little bit of trouble, but I don't think $200 billion is going to move the needle too much, but it's going to move the needle enough to where maybe we could break out of those sixes and into the fives. That might help. And if we can see that, boy, that could make a huge difference.
Yeah. I think that right there is absolutely the case. I was talking to somebody else this morning about that very same thing. And we came to the conclusion that we'll probably see a quarter point drop, over the next couple of days. And maybe we've already seen it, or maybe we're seeing it happening.
Well, I want to show you a chart. So this
let's do that. Yeah.
This was on Friday. Okay. And in this chart, you're going to be able to see what the market actually had done. Now, we can't see on this one here because I don't have a big enough chart lined up, but look at the gain we had. Now, it went way up, but look what happened by the end of the day. It came back down again. Now, it ended up a little lower than it was on Thursday, but look at that rally. That's the little Trump bump right there from the mortgage-backed securities. Now, if we can maintain this, we have bumped above an additional ceiling of resistance, and that could make a massive difference in what interest rates are doing.
Gotcha.
So we've come above that. Now we've got Treasury is at about 4.18. We don't really want it to be over 4.2. That could be negative. So we want it to be 4.18. We're doing great. Everything's fine. The market's done very well. It likes what it sees, but I don't know if maybe the news was a knee-jerk reaction, because we got up about 35 basis points before 10 o'clock in the morning, before 10:30 in the morning. It was as soon as the market opened, it was bang, shot through the roof.
Sure.
But then by about 1 o'clock, 1:30, it had already come back down again. So I don't know if it's because, hey, the market makers, it's Friday, they want to head to the Hamptons. Let's get everybody to buy it. As soon as they buy it, we're going to sell it out from under them. And then we're going to make our $1 billion and go home and spend a day in the Hamptons.
Make it a short day, right?
Yeah. And that's what they do. It's interesting. The market is very difficult to predict, but there are market makers. There are people that are in money on Wall Street that really can make shifts in the market.
Yeah, absolutely. We've talked about affordability here before, which another thing that came out last week, I forget if it was Thursday or Friday, was that Trump says he's going to direct the Congress to legislate that large institutions can no longer buy single family homes.
So true. So what he did, Trump came in and he wants to ban commercial large institutions from purchasing single family residents. Now that's not townhomes or anything like that. So he wants to eliminate that. And the reason for that is these big hedge funds can control not only the purchase market, but control the rental market. Now, these large hedge funds like Blackstone and Tricorp and some of these other companies, they have acquired billion-dollar companies. One they bought for $3.5 billion. And they're putting all these things together. And those huge companies can start controlling what prices do. And if they own a large percentage of the single family residents, they can increase, decrease, create demand, slow demand down.
It's like what you said about the markets and the mortgage-backed securities, right?
First of all, there's good and bad to that, because I don't know if you recall, but after the recession back in 2009, no one was buying real estate except for Blackstone and some of these hedge funds.
If you look back, that's actually when they started. They
I
weren't
know it is.
buying. They weren't even buying single family. That was not on their radar at all. And not getting political, but the Obama administration went to them and said, please mop this crap up. And they were selling, the banks were selling tranches of hundreds of houses to them, all at this, like in big bulk, right? And then when they stopped doing that, they said, what are we going to do? And then they started buying them individually, right? They started going out and
which of them they rented, but then they got that little tank that couldn't became the big tank that could. And boy, they started to control the market. So now at the end of the day, they've only got about 17% of all the homes in the United States, but 17% for a couple of countries.
That's actually a way off statistic. They have a lot less than that. They have less than 1%.
That's
of all the homes.
My numbers show.
I'm going to tell you what it is. They have less than 1% of all the homes. They have 17% and even 20% of some of the homes in some specific areas. They have about 5 or 6% of all the rental homes in the country, right? So when you start looking at different numbers of like, what are you looking at? But overall, it's less than 1%. It's like 0.7 of however many millions of homes there are. But here's another thing I'll let you know. This is a generality, right? They recently, the last 2 years, have been selling more than they're buying. They're selling off inventory and buying different inventory, right? And they're buying less than they're selling off because they're consolidating into smaller geographies for exactly what you're talking about. They own a lot of homes in Florida. Your number might have been from Florida because they own a lot of homes here. Whereas you go into Manhattan, they own virtually none. Like, who wants to be there, in that? Right. So they own it in concentrated blocks, like in Atlanta. They own tons of property in Atlanta, and there they can manipulate and control the market. But the other thing that they're doing is doing build to rent.
Yes,
so
they are
raising capital. They're buying tranches of land, building entire neighborhoods.
Oh, they're getting these builders like Lennar and D.R. Horton to build, and they'll just buy either a whole phase or the whole neighborhood.
Or the whole neighborhood. Great. And there's one up in DeLand that just did this recently. It's like a trailer park, ownership wise. It's all one big lot, and it's got like 60 houses on it.
Insane.
Right?
Insane.
So you can't even sell those individually. You can't. You'd have to break them all up and
you'd have to subdivide every single one of them.
Somehow they got it approved that they could build all these houses on one giant plot of land.
That's why they like to go in and take a community out from one of these national builders and they're probably buying them for 50 cents on the dollar. I don't know what that real
and whatever they're buying them at, they're getting a discount for sure.
When you come in and buy 150 homes from a builder in a community, they're going to work a deal with you.
Well, they also take a lot of expense out for the builder, right? The builder doesn't have to worry about paying people to sit on site. They don't have to have
real estate agents.
It's no agents, they take a lot of costs.
Yep, no rate buy-downs.
Take all that stuff out, right? So it makes it a lot more efficient for them. So I think over time, over the next few years, and that might be why Trump's finally doing this, right? I say finally because everybody's been asking, not everybody, a lot of people have been asking for this to happen since COVID, right?
Sure.
Since we were competing with them for all these houses. I think we're going to find out at the end of the day, it's much to do about nothing because I'm
going to agree with you on that. I don't
think they're impacting today. Back in 2021, they were killing the market. They made it really hard. But today, I don't think as much.
I agree. I think at the end of the day, this is a lot of saber rattling, and I don't think you're gonna see much change. I don't even know how legally it is, how you could say you can't buy something.
Right.
I think that the courts would crush this whole thing. I think it's one of those things when Trump does it, if you say it fast, it sounds good. But when you try to figure out how the logistics are going to work, it doesn't always work.
That's
But
kind of like 50-year mortgage, right?
exactly. It is. It's like a 50-year mortgage. It's like all kinds of different things. However, the positive thing is he's looking under every rock to find a way to make it better for all of us. So you can't go, oh, what's he think he's doing? That's not going to work. He's trying a lot of things. He's doing more than anybody else did. I didn't see Biden do anything when it came to fixing the market. Not one doggone thing.
No.
So at the end of the day, he's looking to create housing one way or another. He's going to try to drop interest rates if the Fed won't behave. And to be honest with you, I don't think we got another Fed rate coming next.
I was just looking at the chart. It's almost like 93% that it's going to stay the same this month. It's not until March that there's a prediction at all, and it's only like 30%.
And it's pie in the sky because it's going to boil down to what is the inflation rate is really what it's going to boil down to.
Well, the job reports have been good.
Yeah.
It's not bad. It's a little bit up.
Unemployment dropped. So unemployment dropped by 0.1%. So that was a big drop for unemployment. Unfortunately, or fortunately, depending on what side of the fence you're on, more unemployment, less people working is good for mortgage rates.
The lower, because they want to stimulate the economy. And so,
right. It's good for mortgage rate. It's not good for the overall economy because I need you to have a job for me to get you a mortgage.
You know that they call it a recession when people lose their jobs. They call it a depression when you lose yours, right? So
exactly. Isn't that the truth?
Yep.
There's nothing worse than not having work, though. That's one of the toughest things for families to deal with. But on the lighter side of it, we're seeing improved interest rates. We're seeing stimulus. The market is being stimulated. I'm seeing more move-up buyers calling me, and they're like, yeah, I'm giving up a 3% rate. But finally, they're letting go because you can only hold on to that rate for so long when your needs for having a bigger home or a smaller home or whatever your needs are greater than the actual money.
Right.
And we're starting to see that more and more. And it's about time. I think we'll see even more of it if we can get these rates down to 5.75%.
Yeah, we're heading there. We'll see what happens this week and get back together next week and see if we can report on it.
You got 1 minute left. I want to ask you, we've been covering a lot of this, and I want our listeners to know you've got to tune in to Tom's YouTube channel at
Florida Real Estate Insider.
Real Estate Insider
on YouTube.
Yep.
So the legislative session for 2026 starts on Tuesday, right?
Yes,
so
it does.
Starts tomorrow, and it goes through March 13th. And one of the big things that they're talking about is property tax relief. There's lots of different options that they're talking about. There's lots of different ways that they're talking about doing it, from everything from completely nuking the whole system all the way to minor adjustments. We'll see what actually comes out of it. I'm tracking it day to day, every single day. News, finding out what's going on. I'm keeping everybody informed with monthly updates, and now I'm doing bi-weekly updates. So every other week, I'm doing an update on Wednesday. So
I interviewed Tom on the weekend. So if you tune into WDBO on Sundays at 11 o'clock or on Saturdays on 102.5 The Bone out of Tampa, you will see, if you want, go to my YouTube channel or his YouTube channel, or you can listen to a full interview on all of the aspects, at least the top part of the aspects. We're not diving in super deep, but you will get a general idea as to what's going on. So go to Bruce Woodburn, the Lone Ranger YouTube channel, or make sure you tune in to WDBO out of Orlando, 580 AM or 102.5 FM out of Tampa. Look for the Lone Ranger radio show. And if you want to watch it on YouTube, it's all right there for you. And man, are we going to keep you informed as to what's going on play by play. Thank you, Tom, for staying on top of that.
You got it, Bruce.
Have a great week.
A great week.